I'm going to say in early 24, silver was $22 at the end of February. I remember very well. And I was at a conference, I was being asked about this, and I said, we're probably very close to a bottom at this point. And I think within a matter of a couple of weeks, it started to gradually trend higher. It wasn't ringing the bell at the bottom, but if you look back, that's when silver bottomed and essentially did not look back after that. Very, very steadily rising. Didn't give you the kinds of returns that you got in gold. Next couple of months, I think we could see more consolidation. I think after that, in the second half of the year, I think we're going to start to see both metals regain bull market status and start rising once again. Not sure that we're going to see the highs that we saw earlier this year, but I do think we're going to see significantly higher prices before the year is out.
Recently, silver reversed a sharp sell-off and consolidated above the 100-day moving average. Silver's price is influenced by both industrial and monetary trends. During this period, the gold-silver ratio widened, a sign that has often preceded silver outperformance when industrial demand increases or monetary easing is expected. PeterKrauth, a former portfolio advisor and 20-year veteran of the resource market, believes gold and silver will likely trade sideways unless a major event changes the trend. He sees this consolidation phase as crucial for building a strong base and anticipates that both metals could regain momentum in the second half of the year, potentially ending at higher levels. Short-term sideways movement is expected, with the possibility of higher prices later in the year if market conditions shift. Krauth points out that silver's stability near $70 benefits producers and explorers. He explains that supply is tight, mainly because most silver is a byproduct of other metals, limiting increased output. Years of deficits have reduced inventories, and previous price suppression from surplus stock is no longer a factor. Supply constraints and reduced stock strengthen the outlook for sustained high silver prices. Looking forward, Krauth predicts silver will likely enter a steady uptrend as tightening supply and strong positioning set the stage for higher prices. To learn more, subscribe for further insights from Krauth's recent interview.
Silver went from $120 to nearly $67 within a matter of a couple of days. So that does a lot to shake out the weak hands. But corrections have to typically correct in a matter of degree on price and over a certain amount of time, so that you get the full sort of sustainable correction, and then you form a proper bottom so that the weak hands basically get shaken out and the strong hands keep holding, and those that feel they may have missed but really understand the true fundamentals of the market will start participating, start buying, and then build that base for a new rise in the market. So next couple of months, I think we could see more consolidation. I think after that, in the second half of the year, I think we're going to start to see both metals regain bull market status and start rising once again. Not sure that we're going to see the highs that we saw earlier this year, but I do think we're going to see significantly higher prices before the year is out. Now we're averaging $70. I think that many of these silver producers and explorers are more than happy at this level. I can't speak for investors, and maybe they're just too greedy, but frankly, these are fantastic prices, and it's tremendous for the market. It has it always has other issues, that's for sure. We talked about the challenges for the solar industry, for example, but as I say, the silver producers, the silver developers, the silver explorers, they're all really happy with these much, much higher silver prices. And the market is very tight. There have been no meaningful discoveries of silver in the last several years. It's been the same for gold. And silver is different from gold in the sense that about 75% of silver comes as a byproduct. Of mined silver comes as a byproduct. Only 25% of mined silver is from what we call primary silver mines. So you depend a lot for the silver that comes to market from mining. You depend a lot on mining other metals. So gold, copper, lead, and zinc. Those are the four most common metals that have silver as a byproduct. So, the producers of these metals are not motivated to produce more silver just because the silver price went up. It's a small portion of their revenues. So they're happy to see silver at whatever price, especially if it's climbing and climbing and climbing, they're not going to go out of their way to try and produce more silver. So you can actually get to a point where, well, we call it the inelasticity of silver supply. So higher silver prices do not mean bringing more silver to market. So I think what we're going to see is, now we've had this parabolic rise. We've had silver pull back. We're at a point where silver is now very likely, and at least for the last couple of months, has averaged somewhere around the $70-$75 range. That, as I say, is more than double where it was a year ago. That is way higher than we've had it. I mean, look, Michelle, it took 45 years for silver to go from $50 in 1980 back to back to $50 last October, and then finally break above it and stay above it. It took 45 years for that, and then it took 3 months to double to 100. That was way too much, too fast. But I think that when we can digest these gains and we can have a healthier, more gradual climb in the silver price as the market comes to terms with the fact that this is a metal that in nearly all of its applications is not easily substitutable, and in many of them it is absolutely not substitutable. That's when, with these tight silver markets, and as I say, few discoveries, next to no, I mean, you look at numbers from the Silver Institute, they're forecasting perhaps a 1 to 2% mine supply growth. That is a drop in the bucket when you have a structural deficit of 10 to 15% every year. If you add up the deficits of the last 4 years, you have an entire year's mine supply of deficit. The only reason that silver prices have been, I'm going to say, capped, so to speak, around that $30 level up until the early part of last year was because the 5 to 10 years prior to 2020, you had excess silver. So you had silver surpluses, not huge amounts, but you did have surpluses, but for several years. And those were building up. And a lot of that was bought and saved as investment, but a lot of it went into the futures markets and sat as above ground inventories. So if you look at those inventories, they peaked in early 2021, and then they started to come off very, very significantly. And then by early 24, I was also wondering, why is the silver price not moving if we're already 2 or 3 years into a structural deficit? And by looking at these inventories, I realized that, well, they've been drawn down. The big industrial consumers, and especially that don't have a choice, absolutely have to have this silver to manufacture electronics, to manufacture solar panels, have been able to go to the futures markets, buy a long contract, and wait for it to mature and take delivery. But that can only go on for so long. These inventories have been significantly drained. And in early 24, I was saying that we've got 12 to 18 months of this. And when we get to a point where those are low enough, a lot of that silver is not available for delivery anymore. So essentially, you've dried up that above ground supply. Remember something very important. Those consumers, those big industrial consumers, could go out and buy that silver that was sitting above ground that had already been produced. And because they could buy it at prevailing prices, they didn't have to put pressure on bringing additional silver to market, even though they were consuming more than we were bringing to market, because we had that excess already sitting there. But I knew that once you got that excess down to significantly low levels, or crucially low levels, then the game was over. You had to have a price reaction. And that's what we got. That's what started, I'm going to say, in early 24, silver was $22 at the end of February. I remember very well. And I was at a conference, I was being asked about this, and I said, we're probably very close to a bottom at this point. And I think within a matter of a couple of weeks, it started to gradually trend higher. It wasn't ringing the bell at the bottom. But if you look back, that's when silver bottomed and essentially did not look back after that. Very, very steadily rising. Didn't give you the kinds of returns that you got in gold. Gold was really stealing the headlines. You had these huge purchasing campaigns by the central banks, and gold was stealing all the headlines, and silver was just biding its time, gradually rising. And when the market saw that gold was relentlessly being bought and being pushed higher very steadily, and crossing through these milestone $3, $4, or $5,000 levels, investors started to say, okay, I need exposure to this sector. Gold's already gotten so expensive. What are my alternatives? And they turn to silver.
PeterKrauth says silver is moving through a classic market cycle. Early, informed investors acted on supply deficits, driving prices above $40 and $50 and into broader awareness. After a rapid ascent, a strong correction followed. Krauth believes this correction will lead to a renewed uptrend, with prices likely to set new highs over time. Krauth highlights that tightening supply, shrinking above-ground inventories, and strong industrial demand are key reasons for a bullish silver outlook. For example, China's planned export controls in 2026 are already tightening supply. Analysts, including Krauth, see these actions as the cause of silver's elevated prices. Global policies and demand are reinforcing silver's strong price outlook.
So this chart shows us how assets go through different phases. And this doesn't have to be silver, but it's very telling, I think, that the first phase is what we call a stealth phase. That's when the really smart money is involved. They've been buying, they've done their research, they know that this is an asset that has significant potential. They know that in the case of silver, there was a structural supply deficit, there still is, and that it was a matter of time before price would reflect the market dynamics. And so, as I say, the smart money gets involved at that point. Then when it really starts to move significantly higher, and I think that when we got to 40 and especially $50, that's when we moved into the awareness phase. And lots of participants that were not as well informed, were not as patient, started to pay attention because silver was making headlines, especially breaking out, a 45-year ceiling. And then more and more people got in and wanted to make a quick buck on it and drove it to 80, 90, $100. So I think what we have is that first bump where it says first sell off, and that's where we were right after things corrected at the end of January, so early February. You had that sell off after, so it was obviously a much bigger spike than we have there, but what you had was people who'd bought in at 80, 90, $100 saw things tank to 60, $70. You had this clear out of weak hands, and a lot of those people sold, lost, and figured they're never coming back. And that's why right there, it's called a bear trap. And so I think, Michelle, we've been through that bear trap at this point. A lot of those participants think that silver is now in a bear market and is never going anywhere near the $100, $120 that it was at before. But that helps you build the base for that new rise. When I put that chart together, we are here was early February. We had that correction. And so that area was essentially the bear trap. So you had that correction. You had people sell out, lost on their sales because they bought higher. They saw it tank, and then they said, "Okay, I'm out." And then so you had that selling by the weak hands essentially. So the strong hands either didn't sell or sold a bit, perhaps took profits close to the top. And then you've had the others who've been watching this all unfold and said, I get it. I see where we are. They have probably done some research. They realize that this is a significantly strong market that has much higher to go. And now that we've had the correction, they're going to start buying. They're going to start buying at the levels where we are now, that bottom, and they're going to set the stage for that new rise. And that new rise takes us eventually out of above the previous top. And as I say, in silver, it's been much higher. But even if the chart looks somewhat different, we're going to eventually take out the previous highs. It could take a year, could take maybe a couple of years, hard to say. I don't think it'll be that long, but yes, I do think we could see triple digits by the end of this year. But I do think that in that chart where we saw the awareness phase that we're in now, and eventually the mania phase, I think the difference is that it's going to be drawn out much longer than we saw. That chart looks compressed to me for when you apply it to silver. The U.S., as you said, just last year in the fall, added silver to its critical minerals list. That's the first time that's ever happened. If you look at the import numbers, which I have, and it, the numbers vary depending who does the research and so on, but we're looking at least 40% of the silver that the U.S. consumes being imported. That's a pretty significant number for the world's largest economy, and silver becoming more important. So why would it add it to its critical minerals list? Look, you've had Trump, for example, saying that they want to build stockpiles of critical minerals. They have all sorts of programs that are government and privately joint funded that will help build these critical mineral stockpiles. They want to be more self-reliant. China actually controls 60 to 70% of the world's silver refining. So even if you may have produced silver in one place, there's a decent chance that it's gone through China to be refined before it gets exported back out. And now they're talking about restricting those exports. It's a licensing thing where they're saying that companies have to have exported a certain amount in the past. The companies have to be a certain size. They're just basically, setting the stage so that they can call the shots more easily and keep the silver at home. Remember, they control about 80 or 85% of solar panel manufacturing globally, and that's the single biggest industrial consumption application for silver. So I don't think it's going to take that long. When you start to get a rebuild and a restocking of arms after using up significant amounts here in Ukraine. When I say here, I meant during this war now here in Iran, and that's not over. So let's see how that goes. But that's a lot of arms to replace, and China's talking about limiting their exports. So it's not surprising that we've even seen, for example, we had seen this decades ago, but it started to happen again in a couple of cases. The U.S. administration has now started to go out and outright buy stock in public companies because they believe in the long-term potential of their projects that are at home. So, within their own borders, and not only necessarily within their own borders. There's an interesting project down in Peru. A company called Cerro de Pasco has one of the world's largest above ground mineral stockpiles anywhere. And so we're talking about an equivalent of about 400 million ounces of silver. Now, this was mined starting back about 100 years. And they had different mining methods. They weren't as efficient as they were today. And a lot of the tailings, or what we call tailings today, still has very high grade, by today's standards, high grade silver, copper, gold, zinc, things like gallium, in fact, which is a rare metal that is, I think, something like 95% controlled by China. So now this company has backing by the Defense Department in the US because they have a critical mineral. So they're providing funds to them to do research to advance the project, and could potentially advance hundreds of millions of dollars of loans to be able to fund and build the project to actually mine this stuff eventually. So, U.S. administration is going beyond its own borders to help finance projects in places that they feel comfortable.
While volatile, silver has shown strong gains, with analysts anticipating it may break from gold's trend to achieve higher percentage gains. As these dynamics continue to unfold, the likelihood of a stronger breakout grows, with the potential for significantly higher prices once momentum returns. Are investors recognizing this consolidation as a temporary pause before the next major rally, or are they underestimating the powerful forces that could drive silver to new highs? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.